Joining us now is Larry Chauvet, Chief Investment Officer at SFG Alternatives in Chicago. Larry, great to see you. Thanks very much for joining us. Now, mentioning their oil prices falling to fresh one-month lows, concerns rising about stockpiles, that seems to be outweighing the impact of this pipeline explosion in Alabama that sent those gasoline prices surging over 10%. But on those oil prices, I mean, they certainly have softened over recent weeks, haven't they, following their post-OPEC rally?
Yeah, and the news did come out late, and natural gas prices did spike quite a bit. I think the big issue is a transportation logjam in the United States, and it's not clear what's going to happen. But you know, the oil market continues to work off of news, off of fear, off of everything but fundamentals. And yeah, the news that came out today was big news for North America, but in the bigger scheme of things, not that big of a deal.
Now, prices have retreated. I think they've dropped about 5% or so since OPEC failed to agree on any sort of quotas there on Friday, part of it implementing, obviously, that production cut agreement. So the focus very much has been on the breakdown of OPEC and non-OPEC talks. Are you still of the view, though, that we will see OPEC achieving production cuts?
Well, you know, either a production freeze of some sort, or OPEC will continue in the style of Draghi and continue to talk in a way that calms the market, just like we've seen when they first talked about having real production cuts a couple months ago. I have a hard time believing that they're going to have hardcore cuts by the end of the month, but I do believe that they'll do something that will continue to restore the market, but it's in their best interest to do so. And they see what their talk has done so far to the market. It's been very productive.
Now, we know that oil prices have sort of been hovering around this $50 mark now for quite some time. I mean, it's been within a relatively tight trading range, but $50, that seems to be sort of the mark. Do you think we need to get through the election over the next week or so before the oil market makes its next move?
You know, I think so, or there has to be some fundamental shift in the market, just like we saw last night where China's PMI came out at a 2-year high, Japan a 9-month high. If we continue to see data like that, and that follows or trickles down to be good information for the oil market, then yes, we'll make that next move.
What are you making of the market at the moment? Just talking of the election there. I'm not sure if Larry can, if he can still hear me, but I'll just keep going. I mean, obviously, both American and European equities declining to their lowest levels since July, and it's all about the US election jitters there. It's really put global investors on the defensive. What are you making of this? I mean, earnings certainly have been better than expected, and that would typically be a catalyst, but that's been negated, I suppose, by all of this noise on the political front.
Yeah, I mean, you're bringing up great points, and no doubt that liquidity in the market is directly affected by the news with politics in the United States right now. But I think beneath the surface, there's this, the market is threatened by this, slow and sustained central bank repricing that we're seeing. And that is, last year it was hard for the Federal Reserve to raise rates. It'd be hard for the Federal Reserve to change the dot forecast. And that's not the way it is right now. I mean, we're getting good growth numbers, good enough growth numbers. And then we have an ECB that very well may taper a little bit on December the 8th. So I think we're just seeing a reset of asset pricing. Bonds, sovereign yields are at a 5-month high, the U.S. dollar at an 8-month high. And yeah, I mean, you're exactly correct. Politics has a lot to do with the fear that's going on an inter-day basis. But I think beneath the surface, people are missing the fact that there is a central bank repricing going on as we speak.
Do you think the Fed is still on track for a December move? I mean, no one expecting a move this week. Obviously, we know the Fed's begun its 2-day meeting there today, expecting to sit tight, even though Fed officials have said that keep insisting that every meeting is live, but the market's pricing in less than a 10% chance they'll announce a hike this week. It's all going to come down to the statement. I mean, do you think they are still on track for a hike in December?
Yeah, and I think the markets, to a large degree, have priced that in. And I think people almost are looking past the fact that they will raise rates in December people are more worried. The market's more concerned with the dot forecast. Like, will that move? I mean, the market is looking at 2 rate hikes next year. Is it going to be 3? Especially given what I said just a minute ago, where now it's becoming easier, less political to raise rates, given what's going on in other central banks. So I think that is exactly what the market is worried about.
Now, give us a bit of an update, because at the start of this month, we spoke to you about this. You'd moved, in terms of your strategy, you'd moved from an income to a growth-focused strategy. Give us a little bit of an update on this, whether it's actually that strategy is on track, Larry.
Yeah, it's definitely on track, not doing as well as I thought, but it continues to track. And the whole basis on this is that over the years, since quantitative easing started, investors have paid an enormous multiple for bond-like equities, like the deep quality stocks that are paying 3.5% dividend yield. And a lot of those stocks have definitely come off since rates have spiked a little bit. However, I think that on a relative basis, growth issues like the Amazons of the world are on a relative basis underpriced because they've never paid a dividend or don't pay a dividend. And I think in a weird kind of way, it's almost a conservative play on quality, and that is to buy growth at the expense of owning quality issues that people have bought because of the dividend yield.
Mm-hmm. All right, fantastic, Larry. Unfortunately, we're out of time, but really appreciate you joining us on the program this week. Thanks very much.
Thank you.